Welcome to this live weekly show. As you know, I always review a bit of the bigger fundamental readings for the week and I take a look at the charts. So I will start sharing my screen with this week's calendar and see what we can make out of the news. Okay, just give me a second and I will be right here with you sharing my screen. Okay, here we are, the main events of the week. Let me take a look at them. Me also, as you know, we have had a few minutes ago, a couple of hours, in fact, inflation figures in UK. The fact is that the core reading yearly basis came up a bit better than expected, 1.1%. Monthly basis, however, it came out as expected, 0.1. Yearly reading is still negative. I don't know. My take is that this is not enough, to boost the pound. We have seen the pound trying to get into positive territory against the greenback, flirted with the 52 level and failed. Overall, I see this greenback pretty strong today and will likely remain so ahead of the release of what seems to be one of the main market movers of this week, which is U.S. inflation. Of course, you know that core personal expenditures is the favorite reading for the Fed to decide whether or not to raise rates. Nevertheless, if we have positive figures in the upcoming CPI numbers in the US, that could give the greenback a nice boost across the board, right? Overall, I was taking the core reading yearly basis. It's close to the 2%, and while the monthly figure has been negative in September, it's expected to tick higher in October, which should be pretty supportive of a December rate hike and therefore of the greenback, right? We have also industrial data, which has been pretty disappointing lately. So I would like to see a nice number in here to confirm further dollar gains. Keep in mind that the market is playing the Fed rate hike right at this time, because if you take a look at recent data in the US, late last week we had poor retail sales, poor producer price index, and nevertheless the euro was unable to run, the dollar barely retreat with the news and then recover ground. Overall, I believe that that's a clear sign of how strong the dollar is. So negative readings can take it all down, but positive readings can take it strongly up. If negative readings can take it down, then a good number will probably give the greenback a nice lift. Anyway, and for the rest of the week, I honestly don't believe that the non-monetary policies, ECB meetings, are relevant. I imagine Draghi under court, take a coffee and talking about the weather. So far, ever since I start with these non-monetary policy meetings, we had nothing coming out of them, no news, no statements, no nothing. So at this point, I don't believe that it's not relevant. Okay, but the minutes of the Federal Reserve, of course, will be. We have them tomorrow afternoon, and American afternoon. And of course, we will be looking for clues or any comments about whether a December rate hike is more or less likely. And I would believe that the market will really stream attention to wording because we have no certainty, right? The change in the wording between this statement and the previous will be the key. Where if I say that they're confident on the ongoing growth, on the ongoing inflation, on the levels of employment, etc., etc. The Bank of Japan will have its meeting also early Thursday, but honestly, there are little hopes of seeing an extension of quantitative easing, which is what the market has been expecting for the past 3 months, I believe. So beware that if the Bank of Japan remains on hold, then could see the Japanese yen getting stronger against most of its rivals. Okay, the ECB monetary policy meeting accounts as sort of a minute statement, which can bring some action to the market, same as this Draghi speech on Friday. But to be honest, Draghi has just made a point about extending quantitative easing, just reviewing the amount of money involved in quantitative easing next December. And ever since announcing that in October, every word that has been in that direction. So I don't expect nothing new with neither the accounts, neither his speech, right? And finally, we have inflation in Canada. You can, as a tip, as a market tip, usually data in between the US and Canada is pretty parallel. We have employment figures. If employment is good in the US, it's probably good in Canada. If inflation is good in the US, it's probably also good in Canada. So depending on how inflation came out today in the US, maybe you have a tip on how Canadian inflation will come on Friday, and therefore give you some clues about what Canadian dollar can do then. Anyway, I will change my screen and move it to my charts. I want to share my charts. There we are. It's raining. It's raining like frogs in here today. Everything's wet. Anyway, I was watching the viewers. It's having some trouble in accelerating its decline, but that overall the bearish trend is pretty much firm in place. I have got a mail this week asking me where do I see the pair bottoming, either 600 or 500. Honestly, I have to say there are no technical signs of bottoming in here. I can say the pair will bottom at a certain level, okay? Mostly because we have no technical signs of it. Take a look at the indicators in the daily charts. We have those correction from extreme levels, and they are back resuming their slides. So there's a good chance that the rally will continue, particularly because every time we break a big figure like 900, 800, and 700, the pair hardly looks back. Anyway, from what I can see, of course, today's intraday move will depend on US inflation figures. If we have a disappointment there, the pair can advance some in the short term, but the dominant trend, remember, is bearish, and I can see at this point a retest of the 460 level, right? The imbalance between central banks is huge, and I believe that's the main reason why. In fact, I was reading that such imbalance also between yields in Europe and the US should be translated in euro dollar at 1. To be honest, parity, I can't see it right now, but if we break beyond 460, it will be closer, no doubt. I was also thinking about this particular pair, right? We have been talking so much about a rate hike in the US. What will happen? Will the dollar advance further, or will we have the buy the rumors solidified in the greenback? Honestly, I have no clue what will happen, but I can tell you something that if in December the US decides to actually raise rates after a decade of keeping them lower, it will be something to take care of. Okay, it will be pretty interesting. Huge market mover, either side, and it's just a wait and see. I can't say what. My personal take is that the dollar will continue gaining, particularly against the euro. Okay, not so much against the rest. Anyway, for today, sorry, I forgot the levels. There's a short-term support around 640. If we break below it, the pair can continue to 600, and below that 570. Remember, 460 seems a probable bearish target. And as we discussed last week, I still see upward spikes and selling opportunities. I don't believe that the rallies we have seen are nothing but selling opportunities. Level I will be watching will be the 750 area, where the pair has been pretty comfortable for this past week and so. 810 seems the next one, 810, 840, and I honestly can't see the pair rising above this level. If it does, it may reach 1.9, but honestly, I can't see it right now. Okay, not this week. Seems way too much. When it comes from the pound, particularly, the fact is that we have been ranging it has posted a nice comeback, right, from the double hit take last week with Bank of England first and the US later. The previous one, not last week, the previous one, right? Payrolls and Bank of England, right? It took a terrible double hit, and we corrected up to 50% retracement last week, and there we are, right? After that, I was checking my 1 hour chart, and it's like, okay, there's nothing to do in here. But honestly, I don't believe that the small bearish tone prevails. It's not yet confirmed, but the pair is unable to recover above this 38.2%. The 20 simple moving average above the level at 200, also in the 4 hour charts. And the technical indicators are saying not much around their midlines, right? But we also have a lower low daily basis. So for the most, I believe that the risk is towards downside, and we need to lose 51.35 for this level, which is the 23.6% retracement of that latest decline to confirm the bearish move towards 50. Okay, back towards 50. I don't know. I remember we have discussed many times that when the dollar got strength because of the possible rate hike in the US, the pound usually was reluctant to follow through the rest, way down, because the market was also expecting a rate hike in the United Kingdom by the first half of 2016. But the latest Bank of England announcement was pretty gloomy, and I don't know. We are all doubting about that. A rate hike in UK be impossible during this 2016. So that's why the pound is now a bit weaker. I do believe that this lack of direction we have seen in dailies these last 5-6 days is because the market is not sure what to really do with the pound. But I would like to see a break above that high around 50 to 60 to talk about a bit more constructive outcome, and indeed a bit of more constructive data should help it. Okay. I was also following the dollar Japanese yen these days because we have that strong advance, right, up to 23.60, right? We correct towards the 38.2%, and here we are back towards the upside. So honestly, I do see room for continued advance in here, but I like to see the price beating this high, okay, the post payrolls high, to confirm an upward continuation. And I will be looking then for a retest of the year high around 25.80. Maybe not for today, and of course it will depend on how positive or negative US data comes out. But I do see the pair breaking higher above this 23.55 is the US data is positive. Okay. I do believe in here the dips are still seen as buying opportunities. What I don't like much is this, right? This 1 and 200 moving average, or both together in the daily charts, lacking direction. I do believe that down to this level, 21.30 or so, 40, the pair can be correcting lower and not being understood as a selling opportunity, right? But if we break below it, it could. Anyway, I don't see the pair that low. I rather play it towards the upside in here, okay? And to be honest, I'm a bit confused about how or why the Aussie bounced this much during the European morning. I was probably watching another channel and did not pay attention. But overall, I don't see real strength coming from the Australian dollar, not as long as we remain below 72.40, which is for me a main static resistance level, right? We have a dip and a corrective movement, but not enough. And I believe that the base is 70.70, right? That's the level I would like to see broken. In fact, today's low. Okay, there we are. That's the level I'm watching. Okay, if we break 70.70, I would expect the right to retest the lows post that week around 70 and even break below that. And I won't be considering buying the pair as long as we remain below 72.40. I do believe that this is a strong midterm resistance, and as long as we remain below it, the bears will maintain their control. Okay. Another thing I'm paying a lot of attention to is gold, because spot, right, started the week advancing almost to 1100, right, because of the unfortunate events that took place in Paris over the weekend. Honestly, really something sad, but that triggered some risk aversion in the market. And of course, gold, it's always getting benefit for that. But if we take a look at the chart, right, the rally was not even, did not last the day. It lasted only the Asian session and quickly revert, right? And the commodity closed below Friday's close. So that's why we are seeing further declines today. We have a support around 71, which is the low we set in July. And as long as we remain above this level, uh, the downside seems limited, the bearish potential. But if we break below it, we would probably run towards 1,000, 1,050. Okay, I do believe that this is extremely bearish. Anyway, I do believe that that's pretty much it for today. I do believe that I stopped sharing. Yeah, I stopped sharing. Okay, thank you guys for everything. Thanks for sharing this time with me, and see you back soon. Okay, bye bye. See you.